first here, SFF and Alameda step in to prevent crypto collapse contagion. Sam Bankman-Fried's Alameda Research is intervening to stop the spread of the crypto bear market. Many crypto companies are facing liquidity issues due to the severe market downturn in 2022. Prominent firms such as Celsius and Three Arrows Capital are both reportedly close to insolvency, and their collapse could trigger a domino effect among other companies. In an interview with NPR on June 19th, SBF said that his companies, Alameda and FTX, are large enough that they have a responsibility to try to stem any contagion, even if it costs them money. They maintain that even if they were not the ones responsible for or implicated in the situation, they still believe that taking action to improve the situation is the best course of health for the ecosystem. SBF noted that his companies have provided Japanese crypto exchange Liquid with financing on multiple occasions in the past, most recently for $120 million last year. He went on to say that FTX plans to acquire Liquid, a deal which reportedly closed in March of this year. Approximately 24 hours later, they stepped in to provide them with a line of credit to cover all of their demands and ensure their customers were made whole. We are now working on a longer-term solution. Most recently, crypto brokerage Voyager Digital announced that Alameda had agreed to give the company a $200 million USDC loan and revolving line of credit of 15,000 Bitcoin worth $298.9 million at current prices. Voyager Digital announced that its credit facilities offered by Alameda will each expire on December 31st, 2024, and have an annual interest rate of 5% payable on maturity. The firm noted that it will only use the credit lines if needed to safeguard customer assets amid severe market volatility. While the Stability Board has outlined good intentions to help suffering crypto companies, recent rumors have surfaced that Alameda may have been involved in the recent instability of Celsius. These rumors contradict the board's stated goals, and Alameda's involvement, if any, is unclear. Some analysts have suggested that Alameda conducted a 50,000 ST-ETH sell-off earlier this month to depeg its price from ETH and jeopardize a large ST-ETH position held by Celsius. If successful, this would stop the company from exchanging the asset for the equivalent amount of ETH. On June 20th, SBF took to Twitter to refute claims that they were interested in harming the crypto ecosystem. They stated that they are only interested in helping those in the ecosystem and that harming it would only end up hurting everyone involved. Up next here, Marathon Digital keeps on mining despite BTC price slump. Despite data suggesting that the average Bitcoin miner may not be profitable at current prices, Marathon Digital Holdings says it will continue to accumulate the leading cryptocurrency. When asked about how Marathon Digital is weathering the current market downturn, Charlie Shoemaker, VP of Corporate Communications, replied that while the company isn't entirely immune to macroeconomic conditions, they are fairly well insulated. This is due in part to their low cost of operations as well as their fixed pricing for power, which insulates them from changes in the energy markets. Shoemaker said that the company has been more focused on its Bitcoin production and accumulation of the cryptocurrency, believing that it will continue to appreciate in value over the long term. They said that since financial reports are in USD, the price of Bitcoin will always have a significant impact on their financial results. Therefore, to evaluate progress objectively, they focus more on Bitcoin production. It is important to remember that Bitcoin mining is a zero-sum game. In a June 9th statement, Marathon said that it had been accumulating or hodling Bitcoin since October 2020 and had not sold any since then. As of June 1st, 2022, Marathon held approximately 9,941 BTC, which was worth around $200 million at current prices. As Shoemaker pointed out, when the price of Bitcoin falls, the number of miners who can continue to operate profitably declines as well, which in turn drives up the difficulty of mining new blocks. However, those miners who can remain operational during this time can earn more Bitcoin. Bitcoin's current processing power, as measured by the hash rate, has fallen from its all-time high of 231.428 exahashes on June 12th to 205.163 exahashes at the time of writing. CryptoRank, a crypto market data and analytics platform, noted last week that on June 16th, the price of BTC was on par with the average cost of mining. For some, it may even be unprofitable to mine at the moment. Marcus Thielen, Chief Investment Officer of digital asset manager IDEG Singapore, told Cointelegraph that there could be fallout from the mining industry as most had set their budgets in Q4 2021 before the change in market conditions. According to Thielen, many of the smaller miners who lack economies of scale will have a break-even rate of $26,000 to $28,000. At present, Bitcoin is priced at $20,085. Last week, S3 Partners published a report identifying Marathon Digital Holdings as one of the U.S. listed companies with the greatest amount of short seller interest, alongside MicroStrategy and Coinbase. Here, El Salvador president addresses bear market concerns with Bitcoin hopium. As BTC began trading for under $20,000 for the first time in 18 months, Nayib Bukele, the president who helped Bitcoin gain legal tender status in El Salvador, addressed the rising concerns of investors. On September 7, 2021, El Salvador made Bitcoin legal tender when its market price was around $50,000. Thanks to Bitcoin's subsequent rally to an all-time high of $69,000, the government of El Salvador has made significant profits on its initial BTC investments, which it has redirected towards various infrastructure development initiatives. As tensions rise amid falling BTC prices, it is important for Bitcoin investors to remember that market conditions can change rapidly. Bukele offers the following advice for those who may be concerned about the prolonged bear market. In his tweet, Bukele advised fellow investors to take a step back and enjoy life. He reassured investors about an inevitable comeback, stating that if they had invested in Bitcoin, their investment was safe and its value would immensely grow after the bear market. Patience, he said, was the key. The community had mixed reactions to the advice received, with many pointing out that El Salvador procured most of its BTC at a much higher price than the current market value. While critics expect BTC and other cryptocurrencies to continue on the downward trend, on-chain analytics signal the oncoming of Bitcoin's reversal back to its former glory. Amidst the bear market, the crypto community has suggested that Bukele launch Bitcoin bonds. As the world continues to monitor El Salvador's Bitcoin economy, Alejandro Zelaya, the Minister of Finance of El Salvador, has responded to allegations that the country has lost over $40 million. Mr. Zelaya stated, "He have said it repeatedly. A supposed loss of $40 million has not occurred because they have not sold the coins." In response to a journalist's question about El Salvador's reaction to Bitcoin's sharp dip, Zelaya responded by saying that El Salvador's strategy is not to be critical of Bitcoin itself, but rather to be aware of the potential volatility of the currency, which I think all of us would be smart to do. Bitcoin's volatile, cryptos are volatile. Know what you're getting into. Be able to lose money when you're investing. You have to just know things can happen, and are you willing to take that risk? Up next here, Solana invalidates Solana whale wallet takeover plan with second governance vote. Solana has created another governance vote to invalidate the recently approved proposal that gives Solana Labs emergency powers to access a whale's wallet to avoid liquidation. This vote is based on the decentralized finance lending protocol Solana. The crypto lending platform Solend has launched a governance vote titled SLND1, Mitigate Risk from Whale to reduce the market risk posed by the potential liquidation of a large holder. This vote would allow Solend to access the holder's wallet and coordinate the liquidation process through over-the-counter channels. Solend's proposal to drop the price of Solana and trigger a liquidation of the whale was approved, prompting criticism from members of the community. Solend argues that the lending platform may end up with bad debt and strain the Solana network if the whale is not liquidated. As the community voiced their disapproval of the move, citing that it goes against the very principles of DeFi, the Solana team put forth a second governance proposal vote to negate the previous one. The vote ended with a resounding 1,480,264 in favor of disregarding the SLND1 proposal. The new proposal renders the previous vote moot and will force Solana to seek another solution that does not entail seizing an account by force. Furthermore, it also lengthens the governance voting period to 1 day. The situation has put the crypto lending platform into a difficult predicament. If Solend succeeds in taking over the whale's wallet and being granted emergency powers, it may save Sol from a DeFi implosion. However, this will show that anyone's assets can be confiscated within the platform and could cause a boycott. Some believe that if the Solana team is not able to mitigate the risks surrounding the whale's account, it could trigger a Solana meltdown, causing a sharp drop in the price of Sol. Yeah, I don't like that. I think that the community is right. I mean, why would people, if they know that they can just get into your wallet, confiscate, control kind of what you're doing with it. Why would people want to utilize the platform? That's just my take on that. Up next here, Elon Musk's support for Dogecoin grows stronger following the $258 billion lawsuit. Not even a class action lawsuit alleging a crypto pyramid scheme could stop Elon Musk from publicly displaying his continued support for Dogecoin. A class action complaint was filed in a New York district court against Elon Musk, the world's richest man, and his companies SpaceX and Tesla. The lawsuit alleges that Musk has been running a Ponzi scheme using Doge and demands $258 billion in total damages. The lawsuit also requests that the court rule Doge trading as gambling in the United States. The lawsuit was not well received by the crypto community, with entrepreneurs mocking the move. Musk himself seemed unaffected by the allegations and instead doubled down on his love for the Dogecoin ecosystem. On Saturday, Dogecoin creator Billy Marcus shared his vision for Dogecoin that goes beyond the hype, recommending the developers focus more on its utility and security. Musk agreed with a more currency-like reply to Marcus's suggestion. Musk went on to reassure Marcus by sharing his openness to using Dogecoin as payment for other services in addition to Tesla and SpaceX merch. This shows his commitment to the success of Dogecoin and will likely increase its adoption rate. There have been reports of bad actors releasing deep fake videos promoting cryptocurrency scams in an attempt to cash in on Musk's success. Musk came across a video on the internet in which a deep fake was used to mimic the entrepreneur on a TED Talk. In the video, the deepfake version of Musk was found promoting a cryptocurrency platform boasting 30% returns on crypto deposits. Yeah, that's fortunate. I mean, you can watch the video here. Doge designer tweeted it out at CB_Doge. They have it there. And, you know, that's scary. I mean, people can utilize anyone's voice. You know, this is the day and age of technology. But again, do your research, check in. Don't just go after something because a celebrity or a rich person is endorsing it. Last but not least here, Synthetics racks up over $1 million in daily fees as SNX token value surges 100%. Synthetics, a layer 2 scaling solution, recently collaborated with liquidity provider Curve Finance to create curve pools for SETH and ETH, SBTC and SUSD, and 3CRV. This allows investors to cheaply convert synths to Ether. The protocol accrued over $1.02 million in trading fees thanks to investors' preference for holding tokens instead of synths. This is 5 times more than Bitcoin's daily performance. The Synthetics protocol, based on Ethereum DeFi, has caused a stir in the crypto community after seeing a sudden uptick in trading activity and an unprecedented comeback by its in-house token SNX during a difficult bear market. The SNX token value surged by 105% to over $3 based on data from CoinMarketCap as a direct result of the massive trading volumes. Kane Warwick, founder of Synthetics, released a blog post highlighting the difficulty of DeFi protocols to absorb Bitcoin's volatility if the price drops even further. He emphasized that if Bitcoin's price falls significantly, it could have a knock-on effect on Synthetics and other DeFi protocols, as they would be unable to absorb the volatility. However, he attributed Synthetics' recent success to the community's responsiveness to difficult circumstances and willingness to experiment with novel mechanisms to provide stability. As of May 31st, the entrepreneur's liquid portfolio is formed almost entirely of SNX tokens. On the other hand, on-chain metrics have revealed that there is significant shorting of the SNX token across numerous exchanges. @NapGener from crypto Twitter has disclosed that 15 million SNX tokens are being kept in a short position on popular exchanges, including Binance, FTX, Bybit, and OKX. However, only 20 million SNX tokens exist on exchanges in total. This revelation points to an oncoming price hike, which might see SNX breach a value of $10. According to a Twitter user, the Celsius network is offering a 300% annual percentage rate to users for shorting their SNX holdings. This allegation has not been confirmed. As Bitcoin prices continue to fall, El Salvador President Nayib Bukele shared a piece of advice on Twitter. He advised people to remain optimistic and to continue to invest in the future. In his tweet, Bukele advised fellow investors to take a step back and enjoy life rather than stressing over the current state of their investments. He reassured investors about Bitcoin's inevitable comeback, stating that those who have invested in Bitcoin will see a significant increase in value once the market rebounds. Patience, he reminded investors, is key, and we talked more on that in the previous article. That is all we have for you guys today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.